setups we're looking at, as well as what are the setups we're looking at coming into Monday morning. Okay, so we're going to start with the usual here with the earnings report. Not a whole lot this week, just looking at Oracle a little bit. We have GameStop maybe, and then Adobe and Costco. Honestly, that's really going to be about it. A lot of these weeks now after the tech company earnings reports weeks are going to be just slow weeks. So for people that want to touch these shit stocks, by all means. I mean, go ahead. But honestly, is it really worth it when we have such amazing setups coming by Meta and Tesla lately? And honestly, just all year, is it really worth touching these? Probably not, right? So just a little note there for any traders that are kind of considering those shit stocks there. But going into the news this week, we're going to be looking at Monday here. It's not the biggest week, but it's definitely a week where we do have some news to be aware of. Okay. Coming into Monday, we do have at 10 a.m. final wholesale inventories available here, and then Tuesday is going to be at 6 a.m. MFIB Small Business Index, 8:30 a.m. revised non-farm productivity QQ, revised unit labor cost QQ, and that's going to be that for Tuesday. Going into Wednesday is going to be one of the denser days, along with Thursday this week at 8:30 a.m. We have core CPI MM, CPI, and the CPI YY. Then we also have at 10:30 as well crude oil inventories, and that's going to be about it for Wednesday. Now, in Thursday as well, we do have at 8:30 a.m. core PPI, and unemployment claims as well. At 10:30, we have natural gas shortage, and that's going to be it for Thursday. And then going into Friday, we don't have almost any news other than import prices. So it should be a pretty clean Friday, hopefully, and a deviation from what we've been getting for a while now of those pretty poorly moving Friday days with consolidations and lack of continuation and follow-through moves. So going into the actual markets here, looking at ES first this week, we're going to be looking at of course, that general uptrend development concept here that we've been getting for some time now. As you can see, we just kind of jump around on the time frames. The general uptrend development, we have these major kind of channeled, structured, ascending pennant kind of vibes here going on the 4-hour. You can go to any time frame. You're just going to be continually seeing this uptrend buying pressure and incentive as well, and sentiment. So 61.11 all-time high, obviously going to be the next one. Almost like every week, I feel like a broken record. All-time high, continuation, right? Kind of waiting for that sell to begin. I kind of thought maybe we were starting to see it a little bit at the beginning of last week, perhaps. But it's kind of just how it's structured up, and didn't get that at all by any means. So overall, like I said, I thought positive sentiment was going to come, but I really need to see that sell off, and start to see that alleviation in the market. But we're not there yet, of course. So upside here, we're looking at the 61 level, 61.0650, and then 61.0375 as well. Just basically common points of support, or resistance really here. I think this is resistance, and nothing really downside structure wise in my eyes. I don't see anything really worth making note of here. I don't think we're going to get downside at all. I could always be wrong. That's the market. It loves to do what it does, but overall, I don't see anything downside-wise. The only level I would say would be, say, right here, this rejection and support point at 6,068.50, right? So going over to NQ, looking over here at the main thing, it's basically the same exact concept here of looking at overall upside structured sentiment and, positive continuation of that as well. Right now, we're on a pretty minor consolidation on a smaller time frame scale at the 5-minute, but on the 1 hour, you can just see we're at a small, basically flat top structure here at the 2160, 70, 75 all-time high. Basically primed up for breakout come off Monday morning, and likely to see some pretty beautiful continuation and follow-throughs on our main watches, being Tesla, Meta, really those big top two. We have two others, but those are our number oneers, and it's probably what I'm going to be looking to only take is one or two and done with those setups, hopefully. So going to be that 2168.50. 2160, 658.50, and then 21,670.75 are those kind of two big levels. That's really going to be it, right? Consolidation tops here, and then the double top wick rejection here. So those are really the only two significance. And then obviously the channel uptrend continuation as well to be aware of. I'm going to the two main watches out of the four here. My number ones are going to be Meta and Tesla. We'll start with Meta. Honestly, Meta, man, is just structured here to really give us a beautiful overall, I think, longer term, like a 5-minute kind of structured up bull flag here. Still small time frame, but on the 1 hour, I'm sure once it's structured up, so it's really just going to kind of form, hopefully, into a beautiful bear flag. We might just get some consolidation ascension here, and that might be it, or we might even just get consolidation here and then just see an incredible spike here with this open here off open Monday morning when we see all that all those orders filling. So we're just gonna have to kind of wait and see, really. But I'm really kind of hoping to see this as a overall bull flag structure development in the 630 level, 630 with target, the target psychological level for our key level breakout, and the 631 as a continuation there. Likely to scale out half at the break, depending on the strength that we get and the overall structure of the market and how I gauge it through intuition. And then 631 is the first target. 632 is final and second target, given that's now kind of reaching overextension. It just kind of depends if this happens. We have got meta where it'll pop a $3 candle. But with that being said, I'm going to be getting out on that because with the way in which implied volatility works with a breakout, the one factor that is affected most through breakouts is in fact implied volatility, and that applies to both positive and negative effects, meaning you will see an increase in returns by a significant margin, but you also see on any form of pullback a loss of premium valuations to a significant margin as well. So that's something to be completely aware of in addition as well. So that's why I typically will sell if there's a big breakout. If anything more than 50 cents, I'm going to be getting out most of my position because it just doesn't make sense to hold risk management wise, right? In the risk department. So going through meta now done. Tesla going to be the next watch here. We're going to be looking at the 400 obvious level. Everyone's going to be watching this in the entire stock market pretty much at this point, I think. The breakout of the 400 key level. I mean, this is a huge level. So 400 into 401, 402, same structure, same concept as meta. However, I'm probably going to be looking for even more on this, given the common strength, the commonality every day we've been getting of just continuation after continuation. I mean, you can just see here that it's really just a no-brainer to see that the continuation has been present most days. Obviously, rejection off open here was it, I think, Friday last week. But we have had some pretty big breakout mornings here, I remember, with continuation. So just something to be aware of, that this could definitely have some beautiful continuation, and just honestly something that really definitely holds some runners on, I think, if you're looking to really maximize your profitability potential here on this trade. But just don't get ever greedy. Definitely remember to scale out. I think that's definitely a wise way in which to execute correctly, especially in this day and age, in the current market conditions. Just scaling out is a no-brainer. And it definitely just secures profit and definitely minimizes risk to a significant margin in all means, really. So obviously 401, 402, now the way in which Tesla moves and the way it works, honestly, this could break to 405 come open. If anything, it could even be at 410. We might even get an open, crazy open like 415, 420. I mean, I've seen this happen, and it's not even earnings. So honestly, there's nothing to really super prepare for this, honestly, other than just be aware that Tesla's probably going to give us a beautiful setup here, more than likely. We could always get a nice, crazy rejection, and then it ends up falling off the list, and we go straight to meta, and then our other two mains. But I don't really see that happening here. I think that we're going to hit 400. We're going to crack it pretty notable, and I think we're going to have continuation because the new structure and sentiment here is totally different than any other we ever got before. It's not just a single rally. It's not just a positive psychological rally basis. It's an actual the presidential election continuation kind of rally here, where it's just going to consistently move forward on it as long as Elon doesn't do some absolutely crazy things. I don't see this honestly going down much, so that's just going to be my thoughts on it. I think this is going to be a pretty clean setup to ride throughout the rest of this year and the beginning of the next year and so forth. Going into the next two moves, I'm going to be looking at Coin and SMCI. Now, those are two A+ setups, Tesla and Meta. Coin and SMCI, for my main watches, are B-, C+ at best. These are not anywhere near as high quality. I just want to clarify that, albeit they are mains, they are not anywhere near as good as what I was looking at on Tesla or Meta. Okay. The reason being, SMCI basically almost being a penny stock, a shit stock at this point, volatility being as high as it used to be, or maybe a little lower, but they still move crazy. And you can take crazy losses on it, with sometimes the spreads being wild as well as like it used to be, even when it was at a high valuation market cap wise. And then on top of that, Coin is really the similar relation of having very low contract volume, typically on a day-to-day when we look at it. It's just very poor volume on the contracts, as well as the spreads just honestly being very wide and not really manageable by any means. So to take a valid risk on this with any sizing for that matter. So for me, this company is probably one of the lowest, not really my favorite quality companies, especially with its crypto basis and its lack of really basis more so on the stock market. I've never been a fan of it because of that as well. Its regulation and actual predictability and probability is just really a very improbably predictive outcome. It really is. It's a very improbably predictive outcome. That's the right way to say it. So that's why I really personally am not the biggest fan, but still something worth making mention of at 350 with 351, 352, 353 into 355 continuation as targets as well. Just psychological targets, nothing crazy here. And then my last setup for this is obviously, like I already mentioned previously, would be SMCI at the 50 break. Really crazy recovery we've gotten here, especially with the fact that there was a lot of discussions of this being completely delisted off the stock market with this incredible, massive market cap loss, obviously from the fraudulent accountant firming claims. And so something to really make note of is going to be the 50 level, I think, here. 50 to 51-ish in that area. I think 50 is the key psychological level. And then looking at it like it already structured up here with the level of 49.86 probably as the best, safest entry, probably with the right momentum and volume, of course, as well, in order to justify that. And that's really going to be that setup. It's really nothing too crazy or special to make note of here. Really going to just be looking mainly at the Tesla as well as the Meta setup coming into tomorrow morning. So those are overall, guys, going to be our main watches for the week, what we're looking at. Just as always, be very, careful, very, very good with your risk, and, manage your sizing accordingly. Don't be crazy. So when we have higher qualities like these Monday or Tuesday, it might be the time to scale up if it approaches correctly and you're able to really read that price action well. But if it's coming later in the week, maybe even size down, not just based off the day, but the quality of the set, but more so as well, in order to manage that risk factor in a more matured trader aspect, I reckon. So just take things on in a very risk management basis profile, and don't overextend yourself this week, if that makes any sense. Really look to take things, especially as the end of the year is coming. We don't always get the best price action in the end of the years, to really just cement this year as a good one by being very, very very educated on what it is you decide to do per trade basis, and very, very specifically decisive and concise with what trades you decide to take. So focus on the mindset of cash days coming into every day. I want to stay cash today more so than I need to take a trade. Always come into a day like that, and I can almost assure you 100% you will come out profitable at the end of every week and every month. And just keep that long-term mindset. Never get caught up in the 1 minute. Always stay in the 4 hour. So appreciate it, guys. Thank you for watching this week's watch list. I hope it helped. Leave a like, comment, subscribe as always, and I'll see you next week for next week's video. Have a great one.